Hey guys, what's up? Alec back with the daily stock market, and look at that, we have some stocks up pretty green today. Let's look at the other way though and look at stocks that are green. We have NEO down 7%, DraftKings down big, Lucid down big, but if we pull up DraftKings and we look at their after hours move, we can see that they're actually up 12%. So we're going to dive into DraftKings and some other stocks in this video. Make sure you stay throughout the entire video because there's also some other super juicy stocks that we got to talk about in this video that you won't want to miss out on. So make sure you subscribe with post notifications on, and let's jump right into this video. So first up, we see DraftKings is about 2 hours after the market closes now, and we can see in the after hours they started to actually head down around 0.5%, and then randomly they just shot up 12%, and they're already headed back down. And why do we see DraftKings absolutely skyrocketing? We can see Walt Disney's ESPN is actually nearing a large new partnership with sports betting firm DraftKings. Okay, this is huge news. If ESPN acquires something like DraftKings, or they have a large partnership together, this can drive so much traffic for DraftKings, and I will honestly be wanting to invest in DraftKings stocks if this is true, because over the next 5 years, Disney is not going to let something like DraftKings sink if they enter a large new partnership with them. Okay, we have some other commenters on this saying, are singular mega corporations owning basically everything in different markets becoming the new norm or something? Disney, Amazon, Coca-Cola, Procter & Gamble, Johnson & Johnson, Meta. Okay, there is a lot of examples, but this is very intriguing to say the least. So if we look at something like DraftKings, and if they end up actually getting acquired by something like ESPN, that will be huge for the stocks. DraftKings is down 63% just in the last year, and from all-time highs, they're still down 75%. They peaked at around $71 per share. So if ESPN is able to boost DraftKings back up just to new all-time highs, or even just old all-time highs, that would be around a 300% gain on DraftKings, which would be absolutely absurd. Personally, I want to buy under $15 per share on DraftKings, and I think they can even get closer to $13 per share again, especially if this deal with ESPN ends up falling through. They'll definitely go to around $10 per share in my opinion, which would be a huge fall from where they're at right now of $17 per share. They're just starting to recover just a little bit. If we scroll down, we can also see they have a $6 billion market cap, so that does need a 3x and get to around a $15 billion to $20 billion market cap. If we continue to scroll down, we can see DraftKings investors are sitting on a loss of 70% if they invested a year ago today. And obviously, this is one of the more risky picks. This is a risky stock in the stock market, so understand the risks before getting involved with something like DraftKings. But if it is official and ESPN does officially acquire DraftKings or just enter some kind of large partnership together, then I think that could be extremely bullish for DraftKings, and I definitely will want to revisit them at that point, and I'll probably want to invest in them for the long term also. So they're definitely one that's catching my eye right now, especially with that ESPN and Disney partnership on the horizon. Now, what other big news is going on in the stock market right now? Well, Friday, which is tomorrow, we have a huge jobs report coming up, and it could be a case where good news isn't really good news. In normal times, strong job gains and rising wages would be considered a good thing. But these days, they're exactly what the U.S. economy doesn't need. So it's a little bit backwards right now because of inflation. Surveyed by Dow Jones expected, the report will show that payrolls increased by 275,000 in September, while unemployment rate held at 3.7%. An upside surprise could mean a more aggressive Fed that could roil markets. And keep in mind right now, Feds are actually expected to raise rates by 1.25 basis points in the next 2 meetings consecutively. So if you know anything about the Fed meetings, that's horrible news for the stock market, and it implies that we'll see much more red to come in the stock market. The biggest rates in the past were 0.75. We made history with a 1.0 basis point increase, okay, on the rates. And now the Feds are projected to do a 1.25, and not just one of them, they're expected to do it back-to-back 1.25 basis point hikes in the next 2 meetings consecutively. So watch out for that. It could be very, very bearish for the stock market over the next 2 quarters. Along with headline jobs numbers, investors will be watching wage growth closely. And if we scroll down, we can also see that the report is due out Friday at 8:30 a.m. Eastern Standard Time, because we can see that worries have shifted in the market lately over the Fed doing too much rather than too little, as some indicators in recent days have pointed to some loosenings of inflation pressures. The Institution of Supply Management on Wednesday reported that its September survey showed expectations for prices around their lowest levels since early days of the pandemic, which is good news. Recent BLS data indicates that prices for long-distance truck deliveries fell 1.5% in August and are well off their January record peak, though still up nearly 22% from a year ago. Correcting a mistake, still, the Fed is likely to keep pushing, with no chances rising that the economy enters into a recession, if not this year, then in 2023. The Fed's mistake is already made. Example, not moving in advance of inflation rising, so it has to double down if it's going to deal with the inflation problem. Yes, recession is inevitable. Yes, the Fed policy is probably going to make it even worse, but the Fed's policy mistake was earlier, not now. It's going to catch up because of its previous mistake, hence recession is around the corner. Even if Friday's numbers are weak, the Fed rarely react to a single month's data point, so that's really not going to sway the Fed one way or another. The Fed will keep hiking until the labor market cracks. To us, this means the Fed is confident that the payroll growth has slowed and unemployment is on an upward trajectory, which is good. So on a recap, in June, the central banks were set to approve a 0.5 percentage point rate increase, but higher than expected consumer price index readings, coupled with elevated inflation expectations and consumer sentiment survey, pushed policymakers in an 11th hour move to a 0.75 percentage point move. Remember, that was really big for the markets, and then they went to a 1.0 percentage move, and now it's predicted that the next hike is going to be 1.25, which will be the biggest ever and will most certainly be read in the markets after that announcement. Okay, so make sure you join the close friends list, because we have a lot of easy puts coming up with this percentage point move that's going to be higher than ever. And make sure you get in the right contracts. Message me on Instagram to figure out all that stuff. I don't think that the Fed is going to pivot or pause or anything of that nature before the end of the year. Certainly not because of the jobs data, an analyst said. Next week's CPI reading is more likely to be consequential when it comes to any shift in the Fed's attitude, she added. So the CPI next week will be a lot more important than the jobs market. Wages are embedded in the cost structure now, and that's not going to change. They're probably going to put more of an emphasis on food and housing prices in terms of their areas of interest, because all that can happen now with wages is we stabilize at current levels, an analyst said. Any sort of lift we got out of this print Friday is likely temporary and tempered by the perception that this is really all about CPI. So watch out for that CPI reading coming October 13th of next week. Make sure you subscribe with post notifications on. Join the close friends list if you haven't been a part of it yet. You're missing out on success story after success story. Click on success number 6 and read through the most recent success stories. You can even click on success number 5 and read through some of the older posts. You won't see the green highlights that say the close friends list, because that's for the close friends list family only, to bring as much value to you guys as possible on a daily basis. So if you need a mentor or if you need a coach, go ahead and reach out to me, because I also have the one-on-one coaching programs where we can talk every single day about stocks. You can bounce your ideas off of me. I do a lot of option trading also, so if you're an option trader, you can ask me about expiration dates, strike prices. You can see which strike prices I'm taking out personally, what stocks I'm buying for long-term, short-term, options trading, and everything in between with that close friends list. That's why so much success has came from that list already, is because there's something for everyone in there. Beginner traders are welcome. I have programs developed for someone who doesn't know anything, and then also advanced traders are welcome, so they can pick my brain a little bit, and we can make some money together on options trades. So thank you guys for all the love and support. Share this video with a friend if you think that they'll find it helpful already, as well. Like this video, subscribe with post notifications on, and I'll see you in the next video. Remember, don't time the market, buy the market. Peace.